Hello, I'm Brooke with Allure Home Group, here to share the monthly market update with you. I want to begin with a quote first from, here we go, Investopedia. It says, real estate is one of the time-honored inflation hedges. It's a tangible asset, and those tend to hold their value when inflation reigns, unlike paper assets. More specifically, as prices rise, so do property values. So what we can see here is that home ownership is one of those things that you can lock in the cost today. It's an asset that's increasing in value in time, and as prices rise and home values rise and all the prices around us rise, you know, locking in that fixed cost in home ownership is really game-changing as a hedge against inflation tomorrow. So what I want to do on this next slide is show you a visual that really, depicts what we were talking about with home ownership outperforming inflation over time. So over time, what you can see is that home ownership is generally looked at as this great hedge against inflation because home values are performing better than the inflation rate. That means that someone buying a home today can lock in at today's cost and protect themselves against the rising cost of inflation in that big monthly payment going forward. Now, this becomes really important when we start to talk about renting because renting takes on the risk of rising rental prices year after year. Rental prices are truly skyrocketing, people. So let me share a quote with you here that's really powerful for renters. It says, and this is from Bankrate, a fixed rate mortgage allows you to maintain the biggest portion of housing expense at the same payment. Sure, property values will rise and other expenses may creep up, but your monthly housing payment, for the most part, remains the same. That's certainly not the case if you are renting, and that's because rental prices rise year after year after year. And so this becomes really powerful for someone who might be sitting here going, I could buy today, but I'm going to kind of press pause and I'm going to wait. I'm going to wait and see what happens on home values. If they drop, if they rise, well, all the forecasts that we've seen show that home values are projected to continue to rise. We also know that mortgage rates are projected to keep rising, and we know that rental prices are rising. So what does that mean at the end of the day? Someone who continues to rent but could buy is taking on the additional increases in rent year after year. Plus, it's going to cost more to buy the same home down the road. So it's really important for renters to understand this dynamic. And I'll show a graph here that really helps show how rental prices compare to inflation rate. This shows that rent increase has been greater than inflation in most years. So let me go ahead and share this quote. I think this really kind of brings it home for us, and it's from Forbes. And it says, homeowners are shielded from mounting rental prices because their cost is fixed, regardless of what's happening in the market. They are locking in at that payment at today's cost. So tangible assets like real estate get more valuable over time. You've seen that in the graphs and the data that we've shown you, which makes buying a home a good way to spend your money during inflationary times. So one last quote for you I want to share from Black Knight that says, as the COVID-19 pandemic continues to create uncertainty in the global economy, the overwhelming majority, 89% of single-family homeowners who sought financial assistance through COVID-related mortgage payment or forbearance plans have exited those plans. So many people, 89% of the people who went into the forbearance plan have exited. And that is massive, massive improvement. And this is why we won't see a huge number of foreclosures come on the market anytime soon. We may see some, but not many at all. Hopefully this market update helps you strike up a conversation and or gives you great knowledge to speak of at your next dinner party. Have a grand day from Allure Home Group.